Our next guest argues the markets have gotten too sanguine. For more, let's bring in Tom Hancock, portfolio manager at GMO. Tom, great to have you with us. Why sanguine?
Well, I think the market is, for example, on the tariff side, it's 15% tariff, suddenly no big deal. This would have freaked people out back in March. Or, sort of DeepSeek, people have forgotten about it, and we see the risk trade back on, whether it's AI names or crypto names, market hitting new highs every day last week, and things aren't really that much better. So not that there aren't a lot of things that are good. We don't have a particularly bearish view on the economy, but it feels like the upside's getting all the attention. People aren't really looking at the downside risks right now.
Since then, though, the economy has proven resilient, Tom. I mean, with each data point, don't we get a picture of a stronger and stronger economy? Volatility is down, and it's not just down when it comes to the volatility index. When it comes to equities, volatility is down across asset classes, whether you take a look at bonds or corporate bonds or currencies. Doesn't this paint a picture of maybe the macro picture actually looking better?
Well, I think volatility being down is kind of my point. That's what being sanguine is. People are not worried about anything. And I think the economic impacts of tariffs have yet to be felt. That's basically inflation kind of around the corner. I think the Fed is right to be cautious about reducing rates on that score. So I do think there are things to worry about right now.
So when it comes to the AI picture, you mentioned DeepSeek and things aren't that much better. Are you worried about that trade? A lot of your portfolio is exposed to that trade.
Yeah. So we are worried about the breadth of optimism around AI. I think the proven commercial use cases are relatively narrow. And so we're trying to focus either on companies like, for example, the social media, where the AI is kind of a proven technology, or we're focused on companies that are, on the one hand, enabling technologies where you don't have to make too specific a bet. I'm thinking about semiconductor equipment, TSMC, names like that. But on the other, where the valuations are still relatively muted. They're not hype names at this point.